I think a lot of people look at Boeing right now and they say, how long will it be?
Business, and obviously getting through the IAM strike is the first big step in doing that.
Boeing CEO Kelly Ortberg's announcement to shut down U.S. production and move operations overseas has rocked American industry. The decision follows President Donald Trump's aggressive tariff policies, which have disrupted global trade, sparked retaliatory measures, and created a hostile environment for U.S.-based manufacturers. Once a symbol of American innovation and industrial might, Boeing's withdrawal marks a major shift in the nation's economic standing. Its U.S. facilities supported hundreds of thousands of jobs and helped anchor entire communities. Now, that foundation is crumbling. Trump's tariffs aimed to revive domestic manufacturing by discouraging imports. Instead, they triggered backlash from key trade partners like China, the EU, and Canada, leading to counter-tariffs, higher production costs, and disrupted supply chains. For Boeing, which relies on global suppliers and international buyers, producing in the U.S. has become unsustainable. Components now cost more, and foreign buyers face steep tariffs, making Boeing's jets less competitive than rivals like Airbus. Retaliatory tariffs have hit aircraft particularly hard, pushing traditional buyers toward non-U.S. options. Faced with rising costs and shrinking market share, Boeing chose to relocate production to countries with more stable trade conditions, lower costs, and closer proximity to growing aviation markets in Asia and beyond. The consequences for American workers are severe. Thousands will lose their jobs, with ripple effects felt across supply chains, local businesses, and entire communities. Universities and technical schools linked to Boeing now face uncertain futures as job prospects for graduates dry up, risking a brain drain of skilled talent. Beyond economics, the move has strategic implications. Boeing's role in defense and aerospace innovation is critical to national security. While defense operations remain, the loss of its commercial manufacturing base weakens the U.S.'s position in global tech leadership. This decision also signals a deeper shift in globalization. The belief that American companies would always prioritize domestic operations is fading. Economic survival now outweighs patriotic sentiment. Boeing's move could inspire a wave of offshoring by other manufacturers, accelerating the decline of U.S. industry and widening economic divides. Politically, the backlash will be fierce, especially from regions that backed Trump expecting a manufacturing revival. Rebuilding trust and trade ties will take time, and the fallout may reshape debates around trade, industrial policy, and globalization. Ultimately, Boeing's exit is more than a retreat, it's a strategic pivot toward where the growth lies. Emerging markets are driving demand for air travel, and having operations closer to these regions positions Boeing for future success. But for the U.S., it marks the end of an era. Boeing's decision to move production overseas marks a symbolic and strategic shift in American manufacturing. Once a pillar of U.S. industry, Boeing's exit signals the erosion of a system that long balanced national pride, global supply chains, and government support. The move raises fundamental questions about the effectiveness of protectionist policies and the future of domestic industrial policy in a globalized economy. Financial markets are taking note. As a key player in U.S. stock indices, Boeing's shift could trigger broader reassessments of the manufacturing sector. Investors may see the relocation as both a warning sign and a pragmatic response to unfavorable domestic conditions. Locally, the impact is severe. Cities like Everett, Wichita, and Charleston, deeply intertwined with Boeing, now face job losses, shrinking tax bases, and potential urban decline. Massive factory spaces risk becoming symbols of industrial decay, echoing the Rust Belt's downturn. For many, this could be a turning point. Some will see Boeing's departure as a prompt to rethink trade policy, invest in workforce retraining, and diversify the industrial base. Others may view it as a cautionary tale against simplistic economic nationalism. Tariffs, meant to protect, have instead raised costs and driven a manufacturing icon abroad. At the core is a cost-driven decision. U.S. tariffs increased the price of essential parts, while retaliatory tariffs made Boeing's planes too expensive for foreign buyers. Caught between rising costs and shrinking demand, Boeing opted to cut losses and relocate. This move fractures a long-established supply network. Boeing's global suppliers, many anchored in the U.S., now risk losing contracts. Small, specialized firms could collapse, and logistics systems tailored to domestic production will become obsolete. New foreign-based frameworks must be built from scratch. Geopolitical complications are inevitable. Boeing will now operate under foreign governments' rules, potentially trading cost savings for reduced autonomy. Host countries will demand jobs, investments, and possibly strategic influence over operations. The aerospace industry is watching closely. Boeing's success or failure abroad may influence how others respond to tariffs and globalization. It could either open the floodgates for offshoring or reaffirm the value of keeping production at home. Federal incentives come under scrutiny. Billions in subsidies and contracts were aimed at keeping Boeing's operations in the U.S. With production leaving, lawmakers may rethink how public funds are used to support private industry. Innovation may suffer. Boeing's close ties to U.S. research institutions have fueled decades of breakthroughs. Moving production abroad risks weakening these relationships, slowing the pace of technological advancement. The human cost is steep. Thousands of skilled workers, engineers, technicians, specialists, face dislocation. Many will struggle to find jobs matching their expertise, while the U.S. lacks the infrastructure to retrain such a workforce quickly. Communities built around Boeing now face cultural as well as economic loss. Generations of civic identity tied to aerospace are at risk. The ripple effects will be long-lasting and difficult to reverse. For host countries, Boeing brings jobs and investment, but also risks. Over-reliance on one corporate giant can strain local economies and infrastructure. Political backlash is possible if the benefits aren't widely shared. Ultimately, Boeing's exit from U.S. production isn't just about tariffs or profits. It's about the unraveling of a model that once defined American industrial leadership. This decision marks the start of a new era, one where national borders matter less, but consequences hit closer to home than ever before. Boeing's pivot opens the door to greater global competition. Aerospace firms in China, Brazil, and India may view the move as a green light to expand their reach and attract more global customers. With Boeing less anchored in the U.S., other nations may fast-track efforts to build up aerospace capabilities, shifting the industry's power dynamics away from traditional Western dominance. Beyond aerospace, Boeing's move signals a broader shift. For companies in sectors like automotive, semiconductors, and pharmaceuticals, it raises questions about the viability of staying rooted in any one country. If even Boeing can't withstand U.S. protectionism, others may rethink their global strategies. This isn't the end of globalization. It's a new phase defined by fragmentation, risk management, and flexible corporate identities. Regulatory responses are likely. U.S. authorities may tighten export controls on aviation tech, fearing it could land in the hands of strategic rivals. New laws could emerge targeting foreign production of critical technologies, but such moves risk clashing with global trade norms and straining diplomatic ties. The impact on labor will be stark. U.S. aerospace unions may lose bargaining power as jobs move abroad. Meanwhile, in host countries, labor activism could rise as workers push for rights in this high-profile industry. Education must adapt too. The old promise of stable aerospace careers in the U.S. is fading. Universities will need to realign curricula with global needs, emphasizing international standards, cross-border collaboration, and remote tech skills. Boeing's culture will face pressure. As operations spread globally, the company must navigate differing laws, norms, and labor practices, while trying to preserve a unified corporate identity. This isn't just a business move, it marks a turning point. The assumptions that once underpinned national manufacturing, corporate loyalty, and global trade are breaking down. Boeing's decision reflects deeper shifts reshaping how economies operate and how power is distributed. The knowledge gap is already shifting. Aerospace relies on deep expertise and long-term skill development. For decades, U.S. universities and Boeing's R&D worked in tandem. As production moves abroad, those knowledge flows are disrupted. Training foreign workforces will inevitably transfer specialized know-how that's hard to fully protect. Legal complexity will rise. Boeing will now face a patchwork of global regulations, raising risks around safety, compliance, and liability. A defect overseas could trigger jurisdictional disputes. Who's responsible and under which laws? Foreign governments gain new leverage. Host nations may use Boeing's presence to boost local industry and extract concessions. In times of tension, they might use Boeing's dependence on local infrastructure to apply pressure. The defense implications are serious. Boeing's civil and military divisions share tech and expertise. With more R&D and production abroad, U.S. defense officials may question Boeing's reliability and shift contracts elsewhere. This all forces a rethink of national security. Traditional security focused on borders and weapons. Now, control over industries, supply chains, and intellectual property is just as critical. Boeing's move challenges the idea that key national assets can remain global yet loyal. It prompts a hard question. How should national resilience be defined in a post-industrial, globalized world?